All right. Hey, guys, if you're watching this live, there was a big, beautiful bill passed last night finally in Congress to break the stalemate in the government shutdown. And it's time now to talk about this. If you're listening to this a couple weeks later when the podcast is released, it's all still relevant. But we've covered this topic before. I want to get into it in just a little bit more detail, but we're going to keep this short. Last night, the big, beautiful bill passed. There are still some things that are open for it, but we don't want to let the tweaks in the whole ACA healthcare thing cause you trouble in your business. Let me rephrase that. They're going to cause you trouble in your business, but we're going to address how you can help mitigate some of that trouble, okay? So if you woke up this morning wondering, for you live folks, so everything just changed. I'm hearing a lot about healthcare costs getting jacked up. You're not alone. Let's unpack it, all right? So bottom line, there are fresh tweaks to the big, beautiful bill, specifically around Medicaid and ACA health, that's kicking off in Q1 of 2026. And it is going to spike employer costs by somewhere between 15 and 20%, very likely, with new mandates. And it's also got some subsidy cliffs on it that prevent you from continuing to get subsidies. So as a quick intro, and to make sure we really understand this, I'm going to drop the truth bombs here from my 30-year perspective on all the various policy changes that happen. Things go up, things go down. It's all a cycle, and we're in it again. And so been through some cage fights on this one, and I want to share everything that I've learned. And last night, there are some last-second zingers, including Medicaid cuts and, like I said, the ACA subsidies getting sunsetted, and it's going to and the mandates are going to really hit your payroll hard, especially if you're providing health care for your employees. And if you're not, it's going to hit them very hard. And it's something you may want to take into consideration as you're dealing with compensation. So this isn't just policy wonk stuff. I've talked to 3 clients in the last 3 days in great detail about this. It's your cash flow that's on the chopping block right now. And I want to decode the drama and give you a real story around a founder who got blindsided, and hand you some steps to make sure you shield yourself and your squad, quite frankly, from this. This isn't a lecture. I'm just giving you some added intel to help keep your momentum rolling, especially going into 2026 with so much uncertainty. So what's the breakdown? What actually just happened to your healthcare wallet? Okay. In plain English, the bill, which is the reconciliation bill that Congress has been fussing over here now for the last however long. And again, I'm going to point out here, I am being completely apolitical. I certainly have political opinions, but I'm not introducing this to give you a political opinion. I'm introducing this to give you a CFO's perspective on, now that this is here, what do we do about it? Okay, so that's first thing. So don't hit me up in the comments about whether I'm a Democrat or Republican. Quite frankly, you don't know. And it should be that way. Okay, so what's real here? Medicaid expansion is going to be cut by 20% starting in 2026. And we're going to pull those ACA subsidies for the middle income people. Going to be around $500 a month that's going to be going out of their wallets instead of staying in their wallets this year. And for teams of over 50 people, it mandates that employers are going to cover 80% of premiums for those teams, or face an additional 5% payroll tax. And you're going to have to evaluate which one of those, frankly, is going to cost you more. All right. In translation, your healthcare costs are going to jump, whether you like it or not, between 15 and 25% if you're insuring 5 or more people. And if you're not insuring those people in your plan, their costs are going to go up separately outside of it. And it's going to be a worry they're going to bring to work with them, somewhere between 15 and 25%. There are some new tax credits up to about $10,000 for wellness programs, but only if you're innovative enough, okay? And what that means is you got to be integrated with some special apps. I don't know all the details there, but it's all laid out in the bill, and you can look it up very easily with ChatGPT. What are the requirements to get access to some of the wellness program credits? So let's talk about some actionable takeaways for you and 4 steps to, I say here bulletproof, but I don't know if it's bulletproof, but somehow mitigate the impact of this benefit change before 2026 gets on our radars. So first of all, immediately, week 1, right now, this week, Pull your current plan and understand it. A lot of time this stuff goes under the radar, but use your HR tools like Gusto or your broker, but you want to tally up your premiums. You want to know for your particular workforce what this is going to cost you. Calculate that hit, all right? As a rough cut, if you want to, add about $2,000 per employee annually to what you're paying now, okay? And flag some gaps. Which subsidies are you going to lose in your business, all right? So know exactly what you're going to be paying for next year versus this year, and know if you've lost the subsidy credits, okay? Second thing I want you to do, weeks 2 and 3, I want you to shop, okay? If it's time for renewal for your plans, or you know you're going to be renewing in the first quarter of next year, you want to shop around. Call an insurance broker. Get at least 3 carriers to give you bids. And I know in some states the number of carriers you can use are limited, but there are always at least 3, and I really suggest you get those bids. And then look for credits. File for anything in the bill that you can file for. There are some $5,000, like I said, $5,000 to $10,000 small business wellness rebates. Find out how to apply for them and apply for them. And the other thing is those are related very specifically to mental health care apps. So just pay attention to whether you can go ahead and purchase or get a subscription to a mental health care app for your employees, because that does lead to some business credits, okay? The other thing is start looking at your benefits as a whole package, including a 401k, okay? If you bundle those up, there are some savings available to you. If you make sure that you offer both health and 401k, there are some savings available. Again, all the details are coming out. Just be aware that's on the horizon, and start asking questions in your business in about 2 to 3 weeks from now, or the next 2 to 3 weeks after you get out a week. Okay, team huddle. 4th week, and this is really important. You got to be transparent about this with your employees. There are so many political agendas out there that nobody's hearing the truth. Nobody's hearing the truth from the left. Nobody's hearing the truth from the right. You need to get the facts as they relate to your business and have an open-minded town hall with your folks. And really what you're saying is, look, squad, this bill's messing with our vibe here, but here's how we have to adapt. You got options to help deal with that. You can offer some HSAs. You can offer some stipends to help offset the jump if you don't actually have a healthcare plan. And one of the things that's a really good retention hack here is you've got flex. Think about ways that you can find other things to do to help those employees who might be severely hit by this. And that's really anybody who's not on a health plan with you and having to hit the public market, okay? And then after that, after week 4, you want to really lock in. I want you to budget what's going to really happen in 2026 with your benefits. Budget 20% at least as a buffer in your forecast for Q1 and Q2. And then you really want to get a relationship with a broker, and you want to quarterly review the costs, okay? You want to get a non-bureaucratic one. There are plenty of them out there. You don't want the ones that are aligned with some of these underwriters like United Healthcare specifically, and they get a stipend from them if they hook you in. You want open and fair brokers who are going to actually help you not only pick the plan annually that's right for you, but every quarter help you see how you're doing against that plan, okay? Your costs could spike. I've said 25%. The reality is 30%. And there are some other options out there for you if you're a larger company. They also are costly and contain risks, but you should look into every option you have. And one of them is self-insurance. So that may be something to think about as well. Again, this is not financial advice for you as your business. I'm talking generally about some options that you have to deal with this. And then here's the big kicker, right? They're still talking about all this. Things could change again. We're coming into another big election year, and I've survived these tax codes through way many years, starting back in 1980, the impact on healthcare costs. They go up, they go down, politics changes them. They may never take effect, they might take effect, but a good business owner is going to be prepared to deal with it, okay? The one thing I want to talk about here that's a little off topic, but I think important, is back in my day, in 2010, we had another reform like this. And the company I was with scrambled, and they basically hiked the deductibles that they provide, the plans deductibles that they offered their employees. And one engineer just plain quit over a 1K surprise bill because they had no idea. Nobody told them, we're hiking your plan's premium. We're giving you the same premium, but we are going to get a plan where your deductible is going to rise by 30%. And when they got hit by this, they felt betrayed. They felt like they were never properly explained what could happen. And that company that I was with had to pay about $50,000 just to replace that employee and get him up the learning curve and all that. So forget about whether you're humane or not. Even if you're not humane and it's all about the bottom line, not working with your employees on this is going to cost you on the bottom line. And I'm going to switch gears and talk about a client I currently have. It's a $10 million tech firm. And they started thinking about this last year when they first started understanding the big, beautiful bill. And in doing that, they looked at switching to a high deductible plan, but then they also increased how much they're going to cover for their employees, so that they ended up basically taking the increase and splitting it between themselves and their employees and just explaining that in plain English. Honestly, transparently saying, look, healthcare costs are going up this much. If we absorb this whole bill for you, we're going to go out of business and you won't have a job or a healthcare plan. But if we split this and I give you another couple options to help handle your half of this, then we're going to make it. And every single employee appreciated that. Every single employee understood the transparency on that. I don't care if they were MAGA voters or Democrat voters. They understood that their employer was trying to help them. And that's how you're going to retain people. That's how you're going to keep from spending all that extra money to bring on new people and retrain them, okay? These are the people you want on your team. These are your people you want in the culture. These are the people who are going to help you scale, okay? Treat them the way you would want to be treated if you were in their shoes. I have the awesome benefit of having been an employee for a lot of years, working with companies who did do this well and didn't do this well, and saw a lot of the repercussions of both. And I can tell you that the bottom line improvement was significant on the people and the employers who handled this with transparency and gracefully. And it may seem like it's going to cost you a little bit more than it should. It's going to cost you anyway. Do it right, it'll cost you less. Okay? So finally, I hope this kind of acts as a little bit of survival kit for you. If you go back through those action items, we really don't want to let healthcare costs cause a massive impact on your cash flow that you can't deal with. So if you implement these steps today, smash the subscribe here, share your bill horror story in the comments, and tune in the next time for what we're going to do to address this and other business finance issues on the Cash Flow Podcast. Okay, so what we've given you here is a little bit of a survival kit for at least the next quarter, maybe next year, around healthcare costs. Love for you to drop your stories down below about what you're going to do. What's the horror story you faced in your past? How has an employer dealt with it? Employee suggestions, thoughts on other ways to help mitigate this for everybody. And then continue to tune into the Cash Flow Podcast, where we will always address the issues that entrepreneurs are facing on a day-to-day basis from your favorite boomer CFO, Pam Pryor. I hope you join us next week. Have a great week, and don't let this big, beautiful bill hurt you.